Good morning, everybody, and welcome to Beat the Bell. Hopefully, all of you are having a phenomenal trading week up to this point. Coming to you live with the futures down about 6 points, selling off hard here, off of the pre-market highs. The market has been choppy. It has not been easy to trade, but we're here to talk about it, and we're grinding it out on Beat the Bell. Money Mander, good morning.
Good morning. Happy March to everyone. Start of another month here. Let's get after it strong.
Brand new month, brand new opportunities. That's right. Diamond Trades, good morning.
What's going on, guys? February pretty rocky for the market. Hopefully March can give us something better. Excited to talk about it.
All right, stock Snipa.
Good morning. God bless America.
GBA, Moe Mamba, good morning.
Mondo, brother, good morning. Good morning. Yeah, choppy week indeed. I think we're going to continue to see more of that.
All right, looking forward to Moe Mamba market analysis later on in the show. And last but certainly not least, Ramsay Rippers.
Yep, choppy week to say the least. I probably not expecting anything too different today for the rest of the week, but let's get after it.
All right, let's dive right into our Fed forecast and economic calendar.
Yep. So we can go ahead and start with the economic calendar for the next couple of days. ISM manufacturing, both ISM manufacturing and ISM non-manufacturing are probably going to be the two most important things that we get for the rest of the week. Today, that's actually the wrong time. That comes out at 2 o'clock today. That's a typo. I'm sorry about that. ISM at 2 o'clock, 10 o'clock, not 2 o'clock. Tomorrow we have that initial jobless claims number and the non-farm productivity. And then Friday we've got ISM non-manufacturing and S&P global services all coming in the morning, as well as some Fed speakers more into the afternoon. So we had a pretty rocky February. Ryan, if you want to throw up the index chart, we had a pretty somber close to the month yesterday with all three indexes closing red to really close out a month where the market's really underperformed, right? We had a situation where the year-to-date highs were set in SPY in both the S&P 500 and the Qs on February 2nd, and it's kind of just been downhill since then with the market closing for its first red month. Right, if you want to throw up the year-to-date figures, right now we're in a situation where only the S&P 500 and the NASDAQ are green on the year. The Dow Jones actually slipped into red on the year territory. As you can see there, all three of the indexes closed red February. NASDAQ and S&P is still holding on to year-to-date gains after that really aggressive push that we got in January. So still holding on to some of the gains there. As far as the fixed income markets in February, February really brought about a reckoning that the Federal Reserve was true to their word, going to raise those interest rates above 5%. The market is starting to price that in. We've seen that reflected in federal funds rate futures as they move more closely towards the path forward that the Fed has projected really since the start of the year. And then additionally, you had the largest 1 month increase in February in the 10-year yield, right? The largest 1 month increase that we've seen since September, showing that there is a bit more uncertainty in the market than there has been in the past several months, as we've seen things just sort of been in a risk-on attitude, right? Like really since the lows were set back in October. So things are definitely becoming a little bit more uncertain, and investors are positioning themselves as such. So we finally have the market beginning to reflect the possibility, not necessarily a certainty, but a possibility that there will be a recession at some point in 2023. This week's data was certainly consistent with that message. Yesterday showed a drop in consumer confidence. We had home price deceleration for the month of February, and then we also had further contraction of regional business activity in the month of February. So all that said, Mander, what do you make of this very turbulent February after that really crazy start to the year that we had in January across all assets?
Yeah, well, I think we did a fantastic job of covering it all, is really what I think. Everyone's getting annoyed at me coming up here with different recession leading indicators, this, that, and the other, but I think it probably would have been less annoying than everyone bag holding longs from 4,200 on the breakout of the trend line and everything. So To me, the action in the debt markets was really just another lesson here in not fighting the Fed, right? And when we had non-profitable tech leading the rally in a 5% rate environment at the start of the year, NASDAQ still up about 9% here off of that. The red flags were there to me, some to you, that it was more so a bear market rally versus bottom potentially in. We'll see how this pans out into March. I got some data here as we move into it. So let's look into what just came out. First thing I wanted to harp on was the M2 money supply actually sunk deeper negative year over year for the first time ever. And so M2 measures the total supply of money in circulation for the economy between cash, checking accounts, savings accounts, and then easily liquid debt, such as like certified deposits and stuff. For the first time ever recorded, thanks to the aggressive quantitative tightening we're seeing from the Fed right now, we not only slowed the growth of it, and we had aggressive growth for 15 years of it. We've not only slowed that, we actually recorded a negative year-over-year change. So basically, economic liquidity tightened so rapidly, it now dropped. And we have less economic liquidity than we did a year ago today, which has never happened before. And then what's coming from that? We just got home sales numbers, as you mentioned, right? I pulled up some data here that I saw on Twitter. This is a home sales versus earnings chart. So obviously, they're going to go hand in hand at the fundamental level. Both are tied directly to consumer spending and rates. If you go back over the past 30 plus years here, home sales versus earnings has had a pretty linear, pretty direct relationship here. However, right now, where we're currently at with this lag, home sales have rolled over aggressively, really, the past couple months here. Earnings have not yet gotten there. And so as I go into March here, we just got earnings from Q4 of last year. As we go into March, really what we've seen over the past couple quarters is that we have the rallies after earnings leading up into the month before the quarter ends. And then that is where we've been seeing the discount come in. If we go back to last March, last June, last September, and last December, it's those last months of the fiscal quarter that we're seeing the discounts get placed in for the potential of the upcoming earnings crunch of the next quarter. And so as we go into March here, we're already starting to roll over at the end of February. I'm looking to see if we get some significant downside here as we've gotten really, really overvalued relative to the consensus forward earnings for the S&P 500. Right now, and even all of last year, we actually had more aggressive selling than the forward-looking, the leading 12-month EPS was showing for the S&P 500. Right now, we're actually on the upside of it. We're significantly overvalued for where the leading 12-month EPS is coming in on the S&P 500. So that is what I'm watching going into March. I want to see if we get a relationship to downside risk. Ryan, do we have the other chart? Fantastic. This is what I was hinting at. We're actually now the most divergent to the upside that we've been on that consensus forward EPS really since the start of this downturn. So I think if not this earnings, maybe the next, eventually I think we're going to start seeing that profitability with the high rates and the consumer spending start to come down off of the economic liquidity, the high rates. So I think right now we're kind of poised for some discounting here going into March, but we'll see what happens.
Yep. Speaking of earnings, we had Target yesterday. Target actually had a double beat. Their EPS came in at $1.89 per share versus $1.40 expected. Revenue $31.4 billion versus $30.72 expected. They gave pretty conservative guidance for Q1 of 2023, highlighting still elevated inflation and higher costs, right? Higher costs for their business, and saying that one of the things that they mentioned that I think it's really going to wind up plaguing the rest of the economy, right? And something that we've really been looking at is they said that customers are throwing less discretionary items into their shopping cart, really only leaving Target with those essentials, those essential things that they need. Those discretionary purchases just aren't really making it. And I guess we'll see how that sort of ripples throughout the economy, but a double beat for Target. And that'll do it for us here on Fed Forecast. I'll pass it back to Alejandro.
All right, gentlemen, thank you very much. Now over to Ramsay Rippers for Bet the Bell. Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right. Thank you, Alejandro. Let's get right into it. Ryan, please pull up the stats. Let's update the team before we get into the green or red question. Everyone's doing pretty well. The team's performing well. Consistent wins after wins. We're going to start with Diamond this morning, as we had that little conundrum on Monday. So today we're going to start with Diamond. Indices basically flat. Little dump here in the pre-market, down less than 0.25%. What do we got today, Diamond?
I'll go with green. I'll go with green today. I'm glad that I'm going first, that there's no excuses from the panel. I'm going to go green.
Snipe. It's good to have you back, Snipe, for the green or red question.
Yeah, I'm going to have to go with green as well. We've had some pretty rough days for the last couple of days. I could expect a little relief bounce.
Hondo.
I'm gonna go red. I think this is my shot to catch up to Diamond here and take the lead for most wins all time.
Mander.
I don't know if I believe that, but it only makes sense. I got to fade.
I'm going to take red as well. I think it's tough. If we see some new money deployed at the start of the month, I could see Diamond running away with this one. But I was just watching, and yields are ripping. Bonds getting sold at the open here as well. So I'm going to go red.
And Mo.
Gonna go green with Diamond on this one. Gonna go green. Hopefully, Diamond, that's not a jinx, because I don't think anyone wants to be sided with me. But with that record, I'm gonna go green. Yeah, green for sure.
Nice. All right. Now we got kind of a question, one that I'm pretty interested in. Start of the new month. I want to know what your March market hot takes are. Give me a hot take. I don't have anything to choose from. This is going to be completely made up from the panel. Diamond, let's start with you.
Ooh, my March hot take is gonna be okay. My March hot take is gonna be that NVIDIA, Netflix, and Meta will all underperform the NASDAQ. NASDAQ 100. Yeah, that's my hot take. NVIDIA, Meta, and Netflix will all underperform. Even though the bottom is in on those three names, I think that they're all going to underperform the index.
Calling for a rough month. Mo.
Market crash, baby. ChatGPT, March 15th. We're all looking forward to it, huh? I'm calling it. Market crash in March, by mid-March.
I can't wait to see how many Bears get squeezed on March 15th just because that ChatGPT prediction. Hondo, what do you got?
I've got that the S&P will trade at 4,300. I can't even say it without fucking laughing. The S&P will trade at 4,300.
Because it's bullshit.
That's
why.
It's a hot take. It's a hot take.
Yeah, it's true.
Mander.
Real hot take. I'm saying Tesla closes the month under 170.
And last but not least, Stock Sniper.
I like SPY to 410 at some point this month.
Somewhat of a hot take. I say Hondo's probably got the hottest. Hondo and Moe's were definitely the hottest take.
New lows in March has to be, yeah, for sure. New lows in March incoming. Let's go.
All right, and then we're gonna end it today with I want the our viewers to get involved here on the YouTube live chat. Everyone who's watching, favorite finance movie. Simple. Give it to me. Diamond.
I hate to say Wolf of Wall Street. I can't say Wolf of Wall Street. I'm gonna go with the regular Wall Street, the OG Wall Street, Mike Douglas.
Charlie Sheen.
I feel like you can say, well, I mean, it's not. I get what you're saying in the sense that it's not like so.
I don't want to get cooked. I don't want to get cooked.
Right.
I'm just gonna pick
Cooked
my
for
second.
what? That's my pick too.
I'm just gonna pick my second favorite. I'm gonna pick my second favorite.
Mo, what do you got?
I forgot about The Big Short. That's another good option. Wall Street, though.
Oh, that is, yeah. The Big Short is a good one. Yeah, I'm taking the Wolf of Wall Street. Not with Diamond. No, he switched up.
Hondo.
I like Margin Call a lot. I don't know if you guys have ever seen that one. That's a pretty badass movie. I'll go with
Margin
that
Call's
one.
a good one.
Mander and then Diamond. Mander and then Snipe.
Big Short for sure. I mean, Michael Berry's like my savior here recently, so I'm gonna go the Big Short.
Snipe.
I'm gonna have to pick Wolf of Wall Street because, like, I mean, Leonardo DiCaprio, cocaine, hookers. It doesn't really get much better than that. But I'm gonna have to go since that was picked already. I got to go with Big Short.
That was picked already too.
Shit.
Just go back to Wolf of Wall Street.
Yeah, no, I think Wolf of Wall Street's okay. I think that's valid.
For sure. All
Yeah,
right.
I guess that's it.
So, Snipe, what do you got, Wolf?
I guess I got Wolf of Wall Street.
All right. All right, guys, that's going to do it. We'll pass it back to Alejandro.
No, wait. No. Can we talk about the AMC trending on Twitter right now?
Is it?
Can we get whoever's still holding your bags? Let me tell you guys, you're fucked. So whenever it's trending, has a $2 pop. Don't get your hopes up. If this shit ever goes back to $40, I'll quit trading. It's recorded. Post this shit. I will quit trading.
Wait, if it ever goes back to what?
Whatever it was at. What was it? $40?
Like
Wasn't that 70 at the highs?
70.
70. The highs, right? Half
Yeah.
the highs.
Yeah,
Give me
yeah.
35. I'll quit trading.
35.
Give me 35.
How'd the
I'll
earnings
quit
go?
trading.
I didn't look at it.
That's it's a bold statement.
That's crazy.
I don't ever think it's gonna do something. Yeah, every time it's trending, I feel sorry because everyone comes out that's holding bags. You're like, oh shit, there's still a lot of people out there holding bags on AMC. You're fucked. Just
Trending
plain
right
and simple.
now. Trending right now. AMC.
I'd like to
hashtag
cha- I'd
AMC
like to-
not leaving. Amazing.
I'd like to switch my hot take to AMC will trade at 35 in the month of March. My new hot take.
Yeah, I'm quitting in 1 month. Damn, I better up my trading, man. Got to make some money then.
All right, Mo, we're coming right back to you for Mamba market analysis.
All right, let's go. Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, SPY daily time frame. We hit on this before. If you guys haven't seen, check out my latest Twitter, my analysis on my Twitter profile. I did go over this and the inverse head and shoulders. Now we will stay on that topic right there. So you guys see the neckline right there and the left shoulder, the head, and the right shoulder. What do you usually get? Break, hook, and go. That's what we got, right? And then you also came off of a daily gap fill. We had swing calls, nice run up off of that. Now we're back into this demand. I'm not too confident in the direction because we are within a range right here. It's very hard. I was letting the Discord know even yesterday. I had no idea where the direction was, and I guess take from that is chop, and that's what happened yesterday. A lot of chop, and then a bearish close, right? A bearish close yesterday with the sell-off. You did though hold, I believe, Friday's close. So right. But the main thing would be is this demand zone. See if we can get through this. I mean, we might come down today, touch it, test it, and bounce over. For some reason, I just don't think we're going to end up coming down and just selling off just yet. I think right now what they're doing is probably trapping bears, right? This, people are getting, everyone's leaning towards a bearish vibe, right? Even myself, but I don't quite think we'll get there. I think we'll come up at least test this zone right here, the supply zone. Either way, it'll invalidate if we come through this demand, right? And watch the neckline as well on this head and shoulders. You guys can get a cleaner look on the 3-day time frame here. You guys can see the obvious inverse head and shoulders, the neckline, right? So that's the big watch, really, right? Nothing else. We're just stuck within range. And if we do bounce off of here, I think they're gonna chop us up within this range on a higher on the daily time frame, that is. So if we do come back, test this demand and close above, I think we'll see some upside movement. I'll even swing calls then to the upside. Yesterday, I couldn't pull the trigger on swinging calls just due to the close. I was watching the close. I didn't like it. But today, if we do end up testing this, closing above, I do like a move to the upside. So just keep an eye on this daily demand down here between 395.5 to 392.6. About a $3 gap. Demand zone, that is, sorry. Demand zone. That'll be it, Hondo. Thanks, guys.
All right. Thank you, Mo. That's going to do it for this morning's show, guys. Appreciate everybody who jumped on. Let's bring the panel back in. For those that don't know, we trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com. Hopefully everybody is ready to trade today. I know that we are. We'll see you guys in the Discord. Anything else? I think that does it. We'll see you guys on Friday morning, 8:30 a.m. Eastern. Have a good one, everybody.